Good morning. Thank you. We have a great group with us today. Our panelists are Representative Nathan Ballantyne from District 71. He's a mortgage lender. Representative Beth Bernstein from District 71, and she's an attorney. James Fleischman, he's a mortgage lender and serves on the CCRA contract committee. We got Gary Pickering, who's an attorney who also serves on the CCRA contract committee. And we have Nick Kermidas, the South Carolina Realtor CEO and attorney. And of course, we have Kim Fuller and Taylor Oxendine, who are account executives for CCRA. So we have plenty of attorneys here. So if you have any questions, feel free. Begin by
Kathy, let me do some housekeeping notes real quick.
Okay. Sure.
So as Kathy said, we're excited to have industry leaders and government leaders with us today to discuss the impact of COVID-19 on the real estate industry. Just quick housekeeping notes. All attendees are on mute. If you have a question, please use the Q&A function on the bottom of your screen to ask the panelists questions. We will try to get through as many questions as we can, but if we're not able to answer everyone's, we'll try to get those answers to you later. And with that, Kathy, I'll turn it back over to you.
Okay, thank you. We'll begin by asking each panelist the issues that they've been seeing with this pandemic and their recommendations for handling these issues from their respective fields. We'll start with Representatives Ballantyne and Bernstein. Nathan, what issues are you hearing from your constituents and what recommendations are you giving?
Yeah, so first of all, Kathy, thank you all, and thank you to the association for putting this on for everybody. You know, this is one of those weird times when my two worlds collide. You know, my paying job is obviously mortgages, and then my public service role is there at the State House. You know, frankly, obviously, it's an understatement. Everybody's worried and concerned about tomorrow and what the future holds. And we've already been through many weeks of this. Primarily out here in the Chapin-Irmo area, I am helping many people just work through the unemployment channels, work through different state agencies, and mainly just putting them in touch with the right areas. You know, we'll talk about this later on. Nick has been a great resource here for the realtor community, and Beth and I don't have all the answers, but we do happen to have the connections. I do want to share one thing. Later today at 2 o'clock, Governor McMaster is having his first meeting with Accelerate SC as we try to get back to some sense of new normal. I guess, you know, I tell people it's similar to 9/11. You know, all of us on this panel remember back in the day when our mom or dad would be traveling at the airport, we could go meet them right there where they landed. And then 9/11 came and that changed. We don't get to do that anymore. Well, there might be some things that we don't get to do anymore because of this virus. And, you know, it's frustrating for me. I'm a handshaker. I like to hug, fist bump, and things like that. And my gosh, we're here in the South. I hope we don't lose that kind of stuff, but no telling. So I'm happy to be on here today, happy to answer questions. It's impacted our state, not as significant as other states, obviously, that we see on the news. But the one thing that I'm most proud of for everybody on the call and in our industry is America is counting on us to get this economy going again. You know, every one of us on this call was deemed essential. And I know Beth and James and others and Gary have been having closings left and right, and they'll talk about how they're doing that differently. But the real estate continues to move on. We just have to do things differently, you know, in the virtual world.
All right, thank you, Nathan. Beth, same question.
Okay. So thank you. This is my first Zoom where I actually can't see the people I'm actually talking to. So good morning. It's a pleasure to be here. So I'm here, I guess, in two roles. One, probably my main role for this purpose is my role as legislator. And then I've been a practicing attorney going on 26 years. Nick and I were in law school together. And a portion of my practice is real estate. So how are we dealing with closings? I'll get to, and I think Gary probably is going to give some input on that as well. But legislatively, you know, a lot of the questions that I'm fielding are really dealing with the unemployment benefits, not so much with the SBA loans, because I think people are going toward their lender with the PPP, but really the unemployment benefits. And like Nathan said, we might not have all the answers, but we've got a excellent legislative liaison type match with different agencies. And so we can direct you to that particular agency, the person who's in charge, and hopefully try to get your particular issue expedited if and when we can. And I think we're both happy to do that for you on your behalf. And as a lawyer, I typically was not e-filing documents. And I think there was some concern because a lot of the courthouses and register of deeds office were being closed, how we were going to update title, and not all of them are online, and how we were going to file documents. Fortunately, in Richland County and Lexington County, which is predominantly most of the work that I do, I am doing e-filing, and I'm also able to update title work and then try to get, without getting the minutia of those legal issues, but try to get, prior title insurance policies, because if you can't physically go to the courthouse, you are going to be limited by what's online, and it doesn't go back the 40, 50, 60 years, whatever it may be that you need to go back. But I think for that purpose, we've been managing really well, and has made make it as efficient as we can. And then just the logistics of getting people in here, we try to limit the amount of exposure that we have. So try to go over the documents prior to, but I haven't done the parking lot closings yet, but I have had some folks, husband, wife, one would wait in the car, the husband would come in, sometimes they both come in, but I have a very long conference table. We wipe it down, we make sure we have fresh pens. I'm at one end, they're at the other. I did a closing the other day, and everybody I didn't wear my mask, but I had a mask if they wanted, but everyone had their mask on and gloves. So we're taking all of the necessary precautions, but we're also trying to recognize that these are purchases or refinances that are very important to the particular buyer or purchaser and seller in that case. And so we're trying to accommodate as best we can while maintaining the health and safety of all involved. So I look forward to hearing your questions and seeing how I can assist in any way. And we've got lots of other speakers, so I'm going to turn it back to you, Kathy. Thank you.
Thank you, Beth. James, from a mortgage lending standpoint, what are you seeing, and what advice are you giving realtors?
Well, thank you, Kathy. It's my pleasure and honor to be on this panel. Been excited to serve South Carolina and this association since 1991, and we continue to do loans here in the Midlands. And so what I kind of want to be a state of the mortgage world right now is I would say it's strong. We're still lending for purchase money. We're lending for refinances. Doesn't mean that we don't have some challenges and some unique things. Having done this like a lot of guys here, we've been doing it a long time, so we've seen different challenges, nothing quite like this. I would say some of the things that we can talk about throughout this call would be, I would say some of our challenges are in two main areas. Employment, as we saw the new filings for unemployment this morning, we're up to some 27+ million unemployed folks. So that's a pretty significant challenge in lending because, of course, income is important to our decision making. The other area would be mostly in government loans, FHA, VA type loans. So we're seeing some challenges there as far as credit scores and that kind of thing. I would say, though, that we still have strong lending. We're still being able to make loans that we should be able to make. Perhaps there's a few in some lower ranges of scores that are causing us a little bit of challenge that we didn't have 6 or 8 weeks ago. So unfortunately, that does occur. So I don't want to say they're on the fringes because those people, it's very much important to them, and we want to get them served. So hopefully in the coming months, those will come back. So I don't know how long this is going to be. Of course, that's what we all want to know is when can we get back to the way we were before? That's yet to be seen if it's ever exactly the same. But there's some questions that we can talk about. Maybe we can bring those up and be a little bit more specific. But those are the two main areas that I'm seeing challenges right now.
Thanks,
Gary,
James.
yeah. Gary, from a legal view, closings have been affected by COVID-19. What steps have you taken and what other issues should realtors be aware legally, specifically regarding, the CCRA sales contract?
All right. Well, thanks, first of all, for having me today. And I continue to be amazed at the tremendous amount of work that Nick and Byron are doing at the State Association and Kim and Taylor are doing at the local association. I hope the realtors understand what you guys are doing and how you guys are out there doing everything y'all can to help them. And I'm just been, as I said, for over the past year or so, continually impressed by the resources y'all are providing the realtors. And I just really am proud to be part of the association. So first of all, thank you for that. As far as our closings go, we started social distancing back at the very first part of December, separating buyers and sellers from each other in different closing rooms, and then doing massive cleanings after each closing, throwing away pins or giving pins to the buyer and the seller to take home. We then asked agents and lenders not to come to closings anymore to try to comply with some of the rules that they were asking us in terms of number of people. When the COVID virus really started raging throughout the country early March, we believed in we had a responsibility to try to protect our clients, our staff, and even our staff's families, because I think a lot of people forget about the families that are involved here, that when people are working and still going to their office, the risk that it puts a family member in as well. And when some of us have elderly family members or have family members that are compromised from health issues, that's also very important that we protect them. So we sent pretty much all our staff home, and out of our 40 plus staff members, we're down to 6 working in our 6,000 square feet here. So we all have like 1,000 feet to have our own space. In our Lexington office, we only have 2 people. So we started that very early. And then with our closings, how we're handling them is that we are sending the closing package to the client via secured email. And then we're calling the buyer on the phone when they come to our office, and they are putting us on speaker in their car, and they're pulling the documents up either on their phone or an iPad or a computer. And we are going over the documents with them, with me sitting in my office and the consumer buyer sitting in the parking lot. We go over the documents, explain them, answer any questions they have. And then when they finish going over and answer any questions, we pull out the signature pages only, and we walk out to the car, hand the signature pages to the borrower. When I go out there, I look like I'm trying to rob you, not trying to get you to buy a house. So I go out like this, and then I hand the documents to you, and then we stand back while you sign them. We have a witness and a notary stands there. I'm a notary, obviously, and then you hand them back. We take them back inside, put them back in order, and send the funding documents to the lender. So we're trying to be extremely cautious as we can with sellers. We're doing the closing in the parking lot where they're in their car, and we're standing back about 15 feet going over the documents while we wear our masks. So it is a terrible way to do closings. We apologize every time we start the closing. Y'all know at Blair Cato, we really like to have the personal hands-on touch. And it's a celebration. Buying a house should be a celebration, not look like a medical exam. But we have had lots of doctors and lots of nurses come in, and they've all thanked us for being extra cautious and trying to help stop the spread. So that's how we're dealing with closings, and quite frankly, I think at least through June 1st, we'll be handling closings that way. Now, as the specific things with the CCRA contract, the 2 things that I would tell people to be cautious of is with specific contingencies. I think we all need to be looking at what specific contingency. For a quick example, if your buyer is a school teacher, it's extremely unlikely that they will lose their job. In fact, I think there'll be probably a hiring boom for school teachers. So the contingency of losing your job is maybe not necessary. But if you have somebody who works in the service industry, then obviously you need to look at adding that contingency with the financing contingency. Regardless of that, the fact that the financing contingency ends 5 days prior to closing, that might be a contingency you want to add, saying that it would not apply if my client loses their job due to the coronavirus. And then the other thing I would add is the doctrine of impossibility, which is kind of a legal term that the lawyers are probably already rolling their eyes on this seminar, getting into these doctrines. But I don't think that doctrine is going to apply anymore. I think everybody's pretty aware that the coronavirus is happening. So when you're entering into a contract now, fully aware of what's going on in in society that's hard to now say, hey, I can't do the closing because of the coronavirus, and to try to allege that I should be able to get out. So those are a couple of things that we're seeing. The last thing I would add before I turn it back over to you is that, and I forgot to mention this earlier, is that one thing that we're also seeing throughout our industry is that because of social distancing, earnest money, we have an app now we've been using for about a year called Zocum to accept your earnest money remotely, so you don't have to bring it in. And then we have an electronic engagement letter, so the client doesn't have to drop off an engagement letter or have to have with their real estate agent get together and fill it out. They can send it in. So those are some things we're trying to do.
Okay, great. Before we get to Nick, if all the attendees, you'll be able to see a poll question that's about to pop up. And if you will select the topic that you want to have answered the most, so that way we can kind of prioritize all of our questions during the Q&A portion. So I'll give you a second on that. Okay, so Nick, as CEO of the State Association, I know you're very well informed at the state and national level. So what message would you give to our Realtor members, and what has the Realtor Association done during the pandemic?
Thank you, Kim. Thank you, Kathy and Taylor, for inviting me today, and to all of our panelists. I know that these last 4 weeks have been extremely challenging, but what realtors do best is turn challenges into opportunities. 2 months ago, we started the year looking at possibly record-breaking numbers in terms of sales, in terms of volume. Never in our wildest dreams did we anticipate a global pandemic to impact South Carolina and our country. But in the initial stages of this, the association quickly went to work to ensure that you could stay working. I don't know how many of you are aware, but the Department of Homeland Security keeps a list of all essential businesses in times of crisis and emergency. Real estate was not on that list 4 weeks ago. It is on that list today. Local governments have passed emergency orders limiting business and the scope of business activities. Real estate has been included on those local government ordinances. Kudos to Kim and Taylor, who work closely with Mayor Benjamin in Columbia to make sure that real estate was essential in those orders. And working with Governor McMaster, I tell you, the governor took a different approach than any other state in the country. And instead of trying to create a complicated list of what's essential, he took a simpler approach and determined what was non-essential and put those out as a list, made it much easier for the business community to comply and for the public to understand. We are, as a state, I can tell you in talking with my counterparts across the country, in one of the most enviable positions from a business standpoint, from a public protection standpoint. Kudos to our friends in the legislature and in the governor's office that have helped us stay in business, even though we know that it's not business as normal. And the message that I have for our members today is to understand exactly what that means. Social distancing, the CDC guidelines, all of those things. As realtors, we have to make sure that we're protecting ourselves, our customers, our clients, our communities. And I encourage you to go above and beyond, implementing virtual tour technology, limiting the scope of your interactions with the public, because our activities over the last 4 weeks are working. They're limiting the spread. They're flattening the curve. And the statistics that we're seeing are starting to come out are very encouraging, that we will slowly be able to get back into a more normal routine over the next few months. It's not going to be, hey, let's flip the light switch and let's all get back to work. It's not going to happen that way. I think the governor understands that, and our business leaders do. So what I would encourage you to do as we jump into these questions today is to reach out to your base. If your business has been impacted and you've slowed down, use this time to reach out to those in your community, reach out to your fellow realtors, reach out to clients and customers. They will not remember 6 months from now, a particular about a CARES Act update or an unemployment issue or this or that, but they will remember that you reached out to them, that you cared about them, that you wanted to make sure that they were in a position of having information and facts and not being scared and reading the news or what crazy stuff you see on Facebook or social media. That realtors are seen as leaders, as a calm voice of reason in our communities, and I encourage you to continue to speak out in your areas and reach out to those in your circles of influence. So I'm looking forward to answering a few questions, and thank you for having me today.
Thank you, Nick. I think we're going to put the results of the poll up. So, of course, number 1 is unemployment assistance. So I will ask a couple of the questions that were already pre-submitted before we went on the webinar today. So I think one of the number 1 questions that we keep getting asked is, can I file for unemployment while I'm still working? If my production has gone down, but I am still working, can I even file unemployment at all? When can and how can I file for unemployment? And some people have already filed, but they got denied by the state already. So Nick, can you start on answering that number 1 unemployment question?
Sure. It's also the number 1 call we're getting on our legal hotline as well. Members are confused. The SCDO website is, I think it was made on the same platform as MySpace was in the 90s. It is a little old-fashioned, to say the least. But I've got to give credit to the director and the staff at DO. They have ramped up their efforts tremendously. I don't know if you've seen the numbers, but going from a call staff of about 50, they're going to have up to 500, I think, by next week is the information I saw. Unfortunately, the number of application requests have skyrocketed 3,000 to 4,000% higher than they've ever seen before. And it's been a confusing mess. Independent contractors never before have been able to file for unemployment. And an independent contractor that is either unemployed or underemployed, I should say, are eligible to file for unemployment. Depending on that underemployment, the numbers that you present to DO will determine whether you're eligible for both the state portion of the unemployment and the PUA, which is the pandemic unemployment assistance offered by the CARES Act, which is about the $600. It's $400 roughly for state eligibility and around $600 for the federal portion. Most independent contractors will qualify for the PUA. But it's one of those things, we've been getting a lot of calls about how you physically fill out the website. And DO has put out a great guideline. I'm going to share a link in the chat here in a minute with the guidebook that DO has posted. And we have Todd Timmons, their DO's counsel, is joining us for a webinar on Tuesday next week to help us with a step-by-step, step-by-step guide on how you do that. For those that are filing, we've been told a couple things. Number 1, you can file today. If you need to file, go ahead and file. Chances are your application will be denied, but don't worry about that. DO says that starting no later than April 25th, they will start making retroactive payments to those that qualify under PUA and under the state portion. It is a matter of updating their website. They're almost there. They've actually added the option to check for independent contractor. Make sure that if you're applying as an independent contractor, that you use your name or the name you use on your tax returns. Do not put your company name, your firm name, because that's not your employer. You're an independent contractor. For those brokers on the call that have received claim forms from due because of an agent that has filed for unemployment, you'll notice that they're asking you to verify terms of employment, salary, etc. Don't fill out any of that. You've got 10 days to respond. The only thing you need to respond is that this individual is not an employee, that they are an independent contractor, and return that documentation back to due. If you do have employees and you're paying unemployment insurance, you will not, if your agents file for unemployment, it will not impact your insurance rates. They won't go up. So don't worry about that. At least that's what the federal government tells us. So you can bank on that, right? So any other questions on this? I'll be happy to answer them, and I'll post the due document here in just a second.
And I think, Nathan, did you want to chime in?
Yeah, I mean, a couple things I'll share is, unemployment, people hate the word and there's different stigmas with it and so forth, but you're not alone if that's you right now. I mean, the state, we have had in the past 5 weeks over 340,000 initial claims. Last week it was down. How bad is this? It was down to 73,000 last week. But I just want to share that with people. But I mean, it is really crippling. I mean, deaths are one thing, but the loss of job and providing for your family is also another one, and needs to be treated almost as seriously. And so that's one of the reasons that we're struggling to kind of get everybody back to I guess, accelerate SC is the term the governor uses, so that we can hopefully continue to move forward. Everybody has a lot of gloom and doom. Nick and others have touched on it. We are at least in an industry that is considered essential, that can work. Yes, we're facing different challenges, but we're working through that. Putting on my mortgage hat, and I think James could verify this as well. Obviously, if you're a realtor and somebody calls you up, and because it is a great time to buy with rates being as low as they are, the first thing you need to ask them is how is this affecting them? Because James will tell you if they don't have a job, we're not going to be able to get them in a house.
Okay, great. Thank you so much for those feedbacks. I think the next question we'll go to is, I know that there's a relief through the CARES Act that is a new round. So what is it, how is it different this time? And that's to the panel.
I can jump in on that, Kim. There isn't really much difference other than they've put more money in the program. We've read reports today that the lenders expect those funds to be empty within 48 hours once they're available, which could be as early as tomorrow, but more likely, I think, on Monday. So if you've got a PPP application in the works, check with your lender to make sure you don't need to file again. And if you've got an EIDL loan, the emergency loan, those are first come, first serve. If you've got a claim number, hopefully you'll make the cut this time. But the demand is so high for these loan programs, we expect that those funds are going to dry up within the first couple of days of availability. And we've already heard from Senate leaders that they're probably going to wait till June or July before they take up any third or fourth or fifth round of which I keep losing track of which relief package they're working on. They want to see what impact it's going to have on the economy and have some time under their belt, so to speak, to see the impact of these first relief efforts.
Okay. And speaking of, oh, I'm sorry, Beth, go ahead.
Well, and what Nick has said on the PPP, I agree. I think there is some issue on whether or not small businesses are actually the ones who are getting the money. And I think that's going to be something that we're going to have to discuss afterward, because really the small businesses are the backbone of South Carolina's businesses. And we just need to make sure in our capacities that we can shed some light on that. I did want to get back to Do. I just wanted for those who have tried to contact Do and can't get in touch, they have increased their staff from 46 to 292. So they are going to have more people who are going to be able to field your questions. The time frame, the call center is still 8 to 4 p.m. Monday through Friday, but they should be able to, with the increase in staff, be more accessible. And Nathan and I are also available if you have a particular issue, because those are what I have, that's mainly what I've been dealing with, are constituents who have had issues with getting in touch with Do and figuring out when they're going to get their benefits.
That's great. Can y'all actually get a little bit more into the PPP and the EIDL and who can actually be eligible for that? I think those are some of the questions that we've had before.
Nick, you wanna take that?
Yeah.
I think Beth was going to jump in.
Okay.
Well, no, I don't need to. I mean, I just know for the PPP, I mean, it's really what your lender's going to, what the financial institution is going to require. But typically it has to be under 500 employees. And Nick, I'm looking at you, even though you can't see, 500 employees. And it pertains to 2.5 months of payroll. So you do your payroll of 1 month, and then you times that by 2.5, and 75% of the money must be spent on payroll. 25% could be utilized for utilities, other things associated with overhead, leasing, rent, payments, whatever it may be. But 75% is payroll. And once you get the money deposited in your account, if you are approved and get the money, then you have to spend it within that 8 weeks. So this is for loan forgiveness. Let me add, this is if you want it to be forgiven. If it's not loan forgiveness, then you have to pay it back in 2 years at a 1% interest rate. Nick, that's correct, right?
Yes, ma'am.
Okay. And you probably can shed some additional light on that.
Yeah, the PPP program is also available to independent contractors as well. For brokerages that are applying, you include all your W-2 salaried employees. You don't include the commissions you pay to independent contractors, but independent contractors can also apply depending on how you're structured. If you're an S corp that only takes draws and you don't get a W-2, you may not be eligible. Unfortunately, that's one of the hiccups in the CARES Act that they did not address in the refunding of it. And the EIDL loan is they've changed the rules on that a couple of times, but it's based on the ability to get an emergency loan. Originally, it was up to $2 million, but they've cut all that back to $15,000 now. There's a max you can get. And the emergency advance, which can be forgivable under certain circumstances, that's only now $1,000 per employee. So if you have 10 or more employees, you can get up to $10,000 of an emergency advance. If you are an LLC and you are the sole employee, you can be eligible for the PPP program. I'm not a CPA or a financial planner. I strongly encourage you to talk with your CPA. Your financial situation is going to dictate whether the PPP is a better option or unemployment, or if an emergency loan may help your business. But check with your CPA is some of the best advice I can share.
Okay, great. We are going to move over to mortgage lending. And one of the questions that we got is, my buyer's credit score change, is that in jeopardy? Is there any recourse on us purchasing a home? James or Nathan, I think that's for y'all.
Well, forbearance is an option that is there to help people if they are in in need, but I think it
Can
should
you
be
actually start with that? I'm sorry, James. Can you actually start with forbearance? Can you explain forbearance and that it is not a mortgage holiday and what that is?
Yes, it is an option to help people that are in need, but it is not a forgiveness type program. So you are forbearing. You're just setting aside those payments for some period of time. May that be 3 months, and then at the end of 3 months, then the lender is going to have several options. One of which would be they would want those 3 plus the one that's due, so there'll be 4 months worth of payments. They may want to be able to spread it out over 1 year. They may conceivably be able to put it at the back of the loan, but under no circumstance would those payments go away. So the reason I caution clients is because it doesn't go away. So if you're having trouble making one payment now, are you going to be in a better position in 3 months to make 4 payments? Now, if you're at the end of the rope already and it helps you buy some time until you can get out there and then some things can come around and you can get some other relief, then maybe that's the best way. But I really want to caution people to go take that step very, they need to be able to consider that step before they do it. It could have consequences now and in the future. A lot of people ask me, well, hey, is that going to be considered in the future when I'm trying to either refinance that existing loan or buy another house in the next 6 months, 12 months? Is that going to have some impact? And it definitely could. There aren't any guidelines that I've seen yet where that is the case, but we do have a historical fact where that has happened in the 08-09 period where people, and 11 and 12 where they were doing modifications. That certainly had impact and was considered by lenders at that time. So again, you want to use that as a method of last resort. Hey, Nathan, you may have some thoughts on that as well.
No, I mean, James, you hit it on the head. What I would add to the realtors and everybody that's on the call here is now more than ever, you see a pre-qualification letter, no offense, but if it's from Quicken, get one of the local guys here. You need to have a relationship because the goal line changes. My company and I think James and some others, some credit scores, there were some movements, tightening up, and then it'll fluctuate and it'll get back to what used to be normal. But you need to work with somebody that you know and trust and somebody who knows what's going on in the industry. I have heard, fortunately not anybody that I know or several of y'all would know, but I have heard that there are some lenders that for whatever reason, their investors will just say, hey, we can't do it anymore. And you'll have somebody in process. And that's to no fault of that particular lender. A lot of people don't understand how mortgages work. And I don't want to take up a lot of time sharing that, but they think it's like you're just going into the store and it, I'll relate it to kind of the toilet paper craze we had a couple of weeks ago. You go in the store and everybody wants 2-ply and 4-ply. Well, that ain't there anymore. You want toilet paper, you may not get it, or you may get a 1-ply, and that's what's going to happen. You'll see a lot of 100% programs have changed some of the requirements and some haven't, but you need to check because it's all driven by the investors that mortgage companies use. And forbearance is going to have a big impact on that. It's interesting. It's going to have an impact on the servicers of those loans, and we're still waiting to get some information on how that's going to be handled. But James hit it on the head. Just because you can do something doesn't mean you need to be doing it. I'll relate it back to the PPP and other programs. Just because, Ruth Chris can apply for it certainly doesn't mean they should have, and, we've had calls from people that make 6-figure income that said, hey, I'm just not going to make my mortgage payment because I hear we don't have to. No. That's not what forbearance is for. If you don't have a job, I got that. But you definitely, as James mentioned, you need to weigh the odds. If you can make your payment, I would highly emphasize you doing that because there are going to be some sort of ramifications down the line.
Great, thank you.
Yeah. We've had some, liability questions, and this is for the attorneys. Can a tenant prohibit prospective tenants from viewing my client's property due to coronavirus concerns?
I don't do a lot of landlord-tenant law, so Nick, do you have any idea on that?
Well, I've got a couple of comments. We've been getting a rash of these types of calls. Tenants in normal situations have to generally provide access for inspections and showings and things like that. If, however, a tenant is concerned about COVID-19 under our current state of emergency, does that now rise to the level of a reasonable objection to the inspection. The only way we know for sure is to go to court, and we won't be able to go to court to deal with this probably till the end of the year. So what I've been suggesting to landlords and folks that are interested in buying these properties is to get the inspector on the phone with the tenant, try to find a way to do a video walkthrough of the property, a virtual inspection, so to speak, that can accommodate all the parties to their satisfaction if possible. I don't know if that's working yet or not. All I know is right now we can't evict tenants. We can't force them out of the properties without going through some type of legal action, which could take months to resolve. So no easy answer on that question right now.
Okay. And then another one we got was, if we try and take precautions, with sanitizer and wipes, can an agent be held liable if a client contracts and succumbs to COVID-19?
I think, and I can answer that. I think there's a lot of things that you have to look at that. I think there's an assumption of the risk at this point that a buyer going into a home assumes some form of risk, knowing that there is the potential to be exposed when you go out in the public, period. I do think there could be some risk. However, if the person that's selling the house has experienced COVID virus symptoms or has been sick, and the agent knows and doesn't disclose that, because remember, we do have to disclose material facts, and I do think that one of the definitions of material fact is the health of the occupant. If somebody occupying the house, that would affect their health, certainly that would be an issue. So if you know that the person who has listed the house has been sick or has symptoms that could be considered coronavirus type symptoms, I think you do have a duty to disclose that. And quite frankly, at that point, I think you need to have the discussion with your client not to show the house until it's done. But there has been a lawsuit already filed against Walmart because they said Walmart did not take safe enough precautions. And so, a lawyer can always sue you for something, but I don't think the risk is there. If you are taking precautions, you're wiping it down, you're providing gloves, you're providing the mask, I don't see that your risk is large unless you know that the person in there is sick.
From the Q&A, I know some of you guys have answered a lot of these. One thing was brought up was about remote notarization. And Nick, I know the state associations worked with the governor a lot on this. Do you want to talk about remote notarization, kind of where it is? And
sure. It's like a war with multiple battlefronts. Being able to remotely notarize documents is not only important for real estate, but lots of other business transactions as well. Congress has got a remote notary bill that could create a federal layer. That is still being kind of bounced around back and forth. I don't think we'll see any action on that before June or July at the earliest. At the State House, I know Nathan and Beth can update us. We've got legislation pending at the State House, but they're not going back into session, full-time session for a while. And so our backup has been communicating this with Governor McMaster. Many states have issued emergency orders allowing remote notaries. Some state Supreme Courts have addressed it by emergency rule. The problem we have in our state is that our state law is very, very specific about, for example, a deed needs to have a notary, a South Carolina deed needs to be notarized. And so we're working with the governor's office trying to find some alternative solutions. I think we're close on it. We've got a couple of ideas that we're looking at. And hopefully in the next few days, maybe even next week, we can have something to share, but no relief on remote notaries at this point.
From the Q&A, James answered.
I think Beth maybe or Nathan wanted to add to that.
Well, it affects our industry, but it also affects family court agreements. I mean, there are a lot of industries that are being affected. So while the the committee process, the bill kind of got stalled a little bit. I think it came through judiciary, then it was referred to, I think, Ways and Means, and then the Senate side, they took it back. So there hasn't been a whole lot of traction. There's a little bit of a controversy surrounding it, but hopefully, because of what the crisis we're dealing with now, and it affects lots of different areas and industries, that we can get something moving when we come back into session. But I agree with Nick. I mean, I think it's going to be an uphill battle, and I'm not so certain that the governor can do it by executive order, but I hope he can, or I hope we can find some solution. Maybe not that he can.
Yeah, can I just want to again emphasize, and it's been said before, but how great that this group is, and Nick and his team are at advocating for the industry. And not to get all in the weeds from the legislative branch, but Beth and I, we're not even in session. Normally we're supposed to be in session over there, and I don't know how this session's going to end, but we're going to be very limited when we go back. We're probably really only going to be addressing the budget, maybe Santee Cooper, I don't know. And so a lot of this stuff might not be done legislatively. We might have to go the route of an executive order through the governor. And again, we got to check the constitutionality and things like that. So I just wanted to share that with you guys, that every one of you that are on this call obviously are a member and know the vital importance of having advocates for your industry. And I can't think of a better group than the faces that you see on here that do that, because in times like this, there might not be a legislative fix for it, and we might have to be relying on relationships with the executive branch, and Nick and Kim and Taylor and others, and Kathy certainly have that.
Yeah, we got another question from the Q&A. I'm going to most likely list a home owned by the estate of a man who's died from COVID-19, but it's been well past the 14 days since anyone's exposed to the virus has been in the house. Do you have to disclose that he has died of COVID-19?
So under our statute 40-57, as y'all know, when somebody dies in the house, typically you do not have to disclose it. So if someone's committed suicide or someone died of a heart attack in the house, you do not typically have to disclose. But you do have to disclose when the person dies in the house of a communicable disease that could affect the future occupant of the house. And so this is actually an interesting question that I'd love to hear what Beth and Nick have to say. My concern is, I do believe, in my opinion, you should affirmatively disclose this. And the reason I'd say even after the 14 days is that there's a funny meme going around on the internet right now about you need to social distance unless you need to go to work. You need to stay home unless you don't need to stay home. And it's like everything they have told us since day one, they have told us the exact opposite thing the next day. So I don't think anybody truly knows that 14 days is exactly the day that it's no longer communicable. And so I'm a little concerned that I would not disclose this and find out 6 months from now, oh, the virus actually could live in the house where someone passed away for a month. So since we don't truly have scientific evidence that tells us that, I would be of the opinion that you would disclose it. Regardless whether you're required to disclose it affirmatively, if someone asks you a question and says, has someone passed away in this house, you absolutely have an affirmative duty to disclose that. But the question really is, do I have to go out and disclose it without being asked? And I take the position with COVID-19, I would do it. I'd like to see what Beth and Nick think about that.
I agree with Gary on this. I think COVID is an area, it's new. We're trying to figure it out and how we're going to adjust. And I think to err on the side of caution, it would be prudent to disclose. I don't think it would be a deterrent for the sale of the home, because the precautions you could take to sterilize the home. But I think that if you know it, I would disclose. I think it only benefits you to be transparent and to divulge that information. And so, yes, Gary, I agree with you on that point.
I would agree too, Gary. As long as the national disaster declaration emergency orders are in place, as long as the state emergency orders are in place, COVID-19, in my opinion, is a material adverse fact. And I don't see any other way we can deal with it.
Another question from Q&A, is there any talk about helping veterans with VA loans from the federal government? Let's see. think that's the major point of that. Is there any talk about VA loans and from the federal government level? James or Nathan, do you have any?
We're still doing VA loans. We do a lot of VA loans, and we certainly love helping our veterans, and we've been doing it a long time. So we have no intention of stopping that, and work diligently with them. We've been able to work out some particulars, especially with several clients that were caught up in a little bit of the pause on the transfers as they were coming into bases here in South Carolina. We were able to get some additional documentation and let them go ahead and close on their house so they didn't lose their house that they were trying to move their family into, even though there was a temporary stay on the transfer of some of those folks. So we've been working hard to do that. There aren't any VA changes to the specific guidelines that pertain to VA loans. Mostly you're seeing that any changes that are happening on the VA loans, it revolves around credit scores and pricing of those scores. So VA has not made any of those changes. Those are lender changes, but we've got options that still continue to serve all the clients that we served previously with VA loans. So.
And I know in our congressional delegation, we've got two huge veteran advocates. I mean, they all support veteran affairs, but Joe Wilson and Joe Cunningham have made veteran affairs kind of the centerpiece of their service. We were on a call with Joe Cunningham just a few days ago, and Congress, I think, is definitely looking at providing some additional support for veterans during this time. There's nothing in place in addition to what's been already there right now.
And Taylor, I just want to add, I think the gentleman that was asking that question is concerned, or has somebody that is concerned about making their payments and the impact. I mean, y'all, the bottom line, you got to do what you got to do to take care of your family. And so that's why forbearance is there. If they're not able to get unemployment and their veterans, what they receive from the government, from the veteran side of things, can't make the mortgage payment and pay the bills, they're going to have to make that decision. The question I think that wasn't asked is, what is that going to mean later on? And that's why James and I and others very much caution on forbearance. Just don't do it because you want to do it. But certainly if you got to put food on the table and you're having to make those decisions, keep that in mind. We're going to look to see, and it won't happen overnight, but eventually there'll be some sort of guidelines, and I'm just winging this, and I think James can agree with this. You know, there might be something where, 6 months from now when we're looking at somebody buying a house, maybe we get some guidelines of, hey, as long as all the other credit's fine and they had a forbearance, don't ding them too much, or maybe it's all going to go back to how that will impact the credit score. Obviously not paying your mortgage is a big no-no when trying to get a new mortgage. But I would imagine, since this is something that the country has not been through before, that there's going to be some sort of guidance for lenders out there. And again, it's going to go back to the investors and the servicers of these loans.
All right, we're almost out of time. We got one more question. After and when this is all over, we've heard from other industry leaders that they're expecting the real estate market to probably take an explosion, hopefully after all this is done. How best can realtors be prepared for when this, this wave is over, in your opinion?
I would say just a couple of points, and I know our time may be running short, so there's a couple of key points I wanted to bring that are kind of where the rubber meets the road for the realtor population that's listening to us today. But I think to Nathan's point previously, you definitely want to be able to continue to engage with your local providers that are here. Go ahead and have those people in, have them pre-approved, have us working on it. I'm even counseling clients if they are currently furloughed, but they are in an industry that they feel like, hey, I'm going to be back in 2 weeks, 3 weeks. We can go ahead and have you approved pending that return to work so that you're ready to go when that time arises. Those kinds of things are going to be important. And the biggest thing, just none of this changes, no matter what challenges we come to, but none of this changes. Communication is so important. The communication back and forth, you hear so many stories about people calling and not being able to get answers from all kinds of different service providers, whether they be government agencies or lenders. So you need to have somebody here that you can trust, that's been around, that you can communicate with. And I think some of the challenge that right now that we're seeing, especially in the pricing of the mortgages and the mortgage-backed securities, I won't go into the weeds about that, but where it matters to you, the realtors, and your clients, your home buyers, is to continue looking and communicating with your lender about what kind of transaction costs you're going to need or your client's going to need. Some of the tools that we have previously had available to us as lenders, where we could kick in some credits, maybe move the rate an eighth or a quarter, and we could throw in several $1,000s to help with that because the transaction costs were not included in the contract offer. Some of those opportunities are not there in the same manner they were, or you have to go so far on the rate to get the credit that it becomes not an acceptable solution. So communicate on the front end when you're making your offer. Hey, how many do I need transaction costs? If so, how much are they? And be real focused on getting those for your client, because that's going to help the process go smoothly. And then also be aware, one last little point about employment. We are continuing to verify employment right up until closing. Whereas before, this was happening before, but maybe we were doing it 10 days before closing. Well, now we're doing it up the 3 days before, 1 day before, the day of closing. So if you know of a situation with a client, it's best for us to know so we can learn how to help them navigate that. But we will be verifying that right up. And I believe most lenders are doing the same thing, just because of the challenges that are happening with such suddenness right now in the economy. So there's a couple little points I wanted to say, just because I think those are things that can help realtors in their day-to-day life. And look forward to answering further questions as they come up as well.
Okay. Since we have a little bit of time, somebody asked, could somebody come up with a standardized form that realtors could use for buyers to sign before they look at a home, stating they haven't had a fever, had no symptoms, etc.? I know Gary answered that a little bit. Nick, I know the state looked into that, but
we do have we've created a hold harmless provision that doesn't address COVID-19 specifically. I think a lot of our members are cutting and pasting things that they see on Facebook and other places, which is a huge no-no. You cannot draft your own addendums. You cannot draft your own provisions in your contracts. That is the unauthorized practice of law, and there are civil and criminal penalties for doing so. So don't get into that business. Hire some great folks like Gary or Beth to do that for you. But the Forms Committee has looked at a number of these. Most of the challenges that we're facing involving coronavirus issues are already addressed in the SCR contract. But I know that you guys use CCRA's contract, which is a little bit different. So I'll let Gary address any local contract issues.
The contract committee, we met via Zoom meeting a couple of times over the past few months, talking about whether we should come up with a standardized form. And I think we talked to the association as well, members in the board, and we also talked to some, I think Byron about it as well. And we basically agreed that we felt it was best left up to the actual individual brokerages to come up with a form that they wanted to use by hiring their lawyers to draft that. There's so many factors that go into the coronavirus that may apply to some people, may not apply. Like I mentioned earlier, some people, if you're a school teacher, you're unlikely to lose your job. But if you're in the service industry, there's a very good possibility you may. And so not everybody needs that standard, language that says, if I lose my job, that I don't have to buy the house, because a school teacher may not want that in because they may want to make a stronger offer and not have that contingency. So it really sits. What I would say is you really need to sit with your client and ask your client what concerns they have and go from there. Now, the other thing I would say is that because the coronavirus has been around at least 6 weeks, of which we've been under some state of emergency, and I get this question a lot. Well, my seller doesn't want to have inspectors in the house, or my seller doesn't want to have the appraiser in the house. Well, they know that going in now. They did not know that in January or in February that the coronavirus was going to be a pandemic the way it is. And so I could see in February, when all of a sudden virus is exploding, that people are saying, well, now I don't want to have somebody in my house. But when you sign a contract April 23rd, you were already aware that an appraiser is going to have to come in the house, an inspector is going to come in the house, and repair companies will come in the house. So, if your seller's already aware of it, they need to put that in the contract about what they don't or are willing to allow. And keep it in mind, if they're not going to allow an appraiser to come in the house, they're probably not going to get the loan.
Yeah. there's at least one other state, Taylor, too, another concern that we have going forward. State of Connecticut's version of their Housing Affairs Department has essentially declared COVID-19 as a disability. And there are a number of fair housing issues. You know, April is Fair Housing Month. Just as a reminder, there is concern about treating individuals, races with bias or prejudice regarding this virus. And I urge caution with all our members, you know, not to give in to the fear, but use precaution, use sound judgment, consult with your attorney, consult with your CPAs, get the right advice before you move forward on some of these things. Because I believe that, you know, the same fundamentals in the economy are going to be here when we make the turn. There's a huge shortage of housing. Interest rates are probably going to dip down below 3% next week. There's going to be so much pent-up demand. I was speaking with a group of brokers from New York who you would think would be in the depths of despair, considering what their markets are looking like right now. But they were among the most optimistic group I've spoken to in the last 3 weeks. They know that home ownership has never been more top of mind than it is right now. Think about the thousands and millions of people that are living in these very dense areas of our country that are going to be looking to get the hell out of Dodge. Excuse my language. But they're going to be looking at states like South Carolina and the great attributes and the things that we have to offer here. And so we're going to have to be poised and prepared for an influx of growth. We're going to have to work with our local governments. Your local association is never going to be more important than working with our cities and towns to make sure we manage that growth properly so that we continue to have the great quality of life that we enjoy in South Carolina. So thank y'all for staying positive through all of this. And thank you for staying Carolina strong.
Thanks. We're at our time. Kathy, before I turn it over to you real quick, I just want everybody to remember that real estate has been deemed an essential service, but we have to continue to conform with the CDC's recommendations for social distancing. As Nick says, you know, business is open, but it's not business as usual or as normal. So thanks. And Kathy, I'll let you close us out.
Well, I just want to thank everybody for joining us today and hope you have some good takeaways from these experts and all to help you through the pandemic. I want to thank everybody who participated or was on the panelists, especially our legislators. And we will be recording. We have recorded this meeting. So hopefully it will be sent out or later. On Wednesday, April 29th, we're going to have a broker panel and have several different brokers in charge discuss what they think the best practices and things to do when this pandemic ends. You'll be getting an email for that. Finally, just make sure you look at your emails from CCRA and then check your spam just in case. And from SCR, Nick sends out a lot of really good information as well. And NAR, so SCR, CCRA, Nick, and all on Facebook. It's always some really good information. Twitter and Instagram. Most importantly, I just want to tell everybody that I hope everyone stays healthy and safe through this time. We are very fortunate in South Carolina compared to a lot of other states, and we need to appreciate that. With that, we're going to end the meeting and appreciate your attendance.
Thank you. Bye.